Welcome to Power Charting. I am your host, Bruce Fraser. How high can stock indexes climb? Today, 2-point and figure case studies. We are in the new on-demand format, so we are no longer bound by time, by the 30-minute segment. Today, I intend to shorten up Power Charting, focus on a few what I consider to be very important index charts for us to study, and in the future we will adjust accordingly. Here is an update, Best of Wyckoff Unconference 2023, July 13th, 14th. This is still coming up. You've heard all about it in the past. It's going to be a great event. And also keep in mind, recordings are going to be available for those that cannot travel and make it to the live event. But really very excited about the Trading Through the Business Cycle event that I'm doing with my many year mentor and partner, Joe Turner. Joe and I have been working on business cycle analysis for, gosh, over 40 years. Joe is just the best of the best. And here you can experience the concepts of the business cycle from an investment perspective. Join us if you can. I am recording today Power Charting on June 22nd. So by the time you see this message, we will be a day after. Recordings are available, also PDFs of the slides, and there are 2 more episodes, the 29th and July 6th. So please come, please attend if you can. It's going to be a great time. And then a very exciting announcement, and that is that we are going to have an open session of the weekly Wyckoff market discussion. This is an in-depth, deep dive into financial markets that Roman and I do together every Wednesday afternoon at 3 p.m. Pacific time. We cover the broad spectrum of markets, and it's a great time. Please join us this coming week. June 28th is going to be a free session. Register at wyckoffanalytics.com. Our first chart of the day is the QQQ Trust Point and Figure Study, and this is the accumulation structure that has been building up since the middle of last year, literally June of last year. We are counting this in 2 segments. Let me get my pen handy here, make sure. Okay, so here is segment number 1, 11 columns, segment number 2, 23 columns, and you could see it even could be counted to a larger area. We're being conservative in our count structures, and the first count that we see, 3-box method, 4-point scale, standard scaling, takes us up to a count of 388 to 420. We are, as of this chart, June 21st, the summer solstice. You can see that we've touched 372, and look at this magnificent catapult wall. This is exactly what we were looking for in the structure of accumulation, which is here you see there is a hinge developing. This hinge is evidence of absorption of shares. This is an accumulation of shares by strong hands, that once they have locked these shares up, it's going to be very difficult to buy and hold these stocks because they are held in quantity by the very large interests that have the expectation of higher prices. Consequently, any incremental increase in demand is going to drive up prices. And it's exactly what happened. That's why in May and June, we had this really magnificent run up to the area that we're at now in what they call old school catapult wall. Now, where are we? We are in the area of resistance. This zone here back in March of 2022 was the highest point that the Qs were able to get to before cascading down into their ultimate low, which came around the time of the end of the second quarter of 22 in June. So this is critical resistance, this area here, and you can see resistance is forming also at this 368 level. We've made one tick above to 372, but higher objectives are still here, 388 to 420. Can it reach that area? Well, we're going to look at a line chart in a minute. The thing to keep in mind here is that even if we can't hit these objectives, our point and figure count, our vertical bar chart analysis has kept us on the right side of this market. And the accumulation characteristics that we've been able to see in the Nasdaq, in the triple Qs, has pointed us towards a markup into resistance. Now this area is the highs of the bull market peak in 2021, which also is the zone of this count area and would be formidable resistance, and we could still get there. We may have to stop, pause at this resistance zone, and build some count for a further move to get up into this area. We can't predict time with point and figure. We are just simply estimating the extent or the potential for how far the move can run. But this has done a super good job for us already, and we are watching it very closely to see if, in fact, by the end of the quarter, and we're very close to the end now, positive seasonality into July, mid-July, we could have a further momentum surge into our price target area. Time will tell. Okay, so with that, let us move. Oh, let me just make one other comment, and that is here. This larger count area, which is 23 columns across, takes us up to a whopping 532 to 564, which is new high ground. So we I would expect that we will in fact consolidate before there's any potential to go to these levels, if at all, if ever. But we would see a reaccumulation count form that would give us this objective and confirm the base count that we see here, the accumulation count, 532 to 564. Okay. Oh, and then I have some chart notes. Let's clean this up, and I will just put these up here so that you can study them. And we are at quarter end window, at key resistance. Momentum is in force. That could help to drive prices higher. Here is the NDX. Now, I apologize for mixing and matching here, but the triple Qs and the NDX have very, very close correlation to each other. And I want to show you the breadth characteristics, which we can do with the NDX and not with the triple Qs. So here we see the vertical chart that we've been studying and working with for a very long time. Here is our accumulation structure: selling climax, automatic rally, range bound condition. We see the hinging action as it becomes ever duller and quieter. We have this last point of support decline into the end of 2023, which the institutions, I think, were just puking up stock, excuse my language, at this level. And this just set up the conditions for this most glorious advance that we've had. Now we can see the upward striding trend channel, and this upward striding channel has clearly broken out. Nasdaq 100 triple Qs has led the way for the whole market here and has made a major sign of strength. This is called a minor sign of strength. Took out this peak. This is a major sign of strength. Note that the top of this channel and also our point and figure count objective area roughly match each other and are in the zone of this resistance is formed by the distributional top that we see back here in early 22. And So to get up to the top of the channel in some kind of a climactic surge would not be surprising at all. But now let me turn my attention here to the zone of this Nasdaq 100 stocks above their 50-day moving average. Just a really good breadth indicator, and we can put it right on the bottom of this chart and follow it. And you can see that we are looking for really two attributes of this indicator. One is directionality. We want to see whether it is rising or falling. If it's rising, we generally say that breadth is getting better. It's confirming the upward trend in the index. When the trend is falling, it says that we have a general diminishment of breadth. It's a negative condition. Most stocks are in falling mode, and we want to go with the primary direction of the breadth. In this case, I want to make the point that the high that was made in August a year ago here, and I've actually put this green shaded bar across this zone, is in the vicinity of 90% of stocks are above their 50-day moving average. Very, very positive bullish breadth. Here in December, we hit over 80%, and then we had a divergent characteristic. Note, so we have a high, we have a higher high in the index, a lower high in the 50-day moving average of breadth, and you can see that then following that, a downward stride, which takes us into the low that was made at the end of the year. This is a rather positive, not a divergence really, because both of these are higher, but it really demonstrates that stocks are starting to get in gear for higher prices. So very constructive. We looked at this at the time. We look at this all the time. It really has done a super job of keeping us on track. Now, here, this is not a positive divergence per se. It is a positive confirmation. Higher highs in the stocks above the 50 and higher highs in the index. And this is coming at a backup. And a backup is a very narrow, tight range at the area of resistance after an important rally to that resistance area, which shows that supply is not present. It's been largely absorbed. Note the volume dry up in the backup zone. That is a very good clue that there's just no selling left in this market. And in fact, we see that in April, May, the upward stride, which we see as a catapult wall on the point and figure chart, and a beautiful uptrending action in these NASDAQ 100 stocks. But note here that we see in the breadth that the breadth is not getting up to the levels that it was able to get at in December last year, in August of last year, and is actually somewhat narrow. This is evidence of a narrow market. Now, can a market become less narrow, broaden out, have more participation? I would suggest that that is going to be what is going to be the case if we get higher prices, is we have to broaden out. And I believe how that would happen is that some of these big 8 NASDAQ super large cap stocks will get sold back by institutions. They will reduce their holdings because they've appreciated so much, and then they will redeploy those assets into other good stocks. I see good action, good things happening in the industrials, in the materials, and so on. Talk more about those in future weeks, as we have in past weeks. Also, look at last week's power charting, because there's some really good work in there on some of the other indicators we like to look at, such as seasonality. Here is the S&P 500. Note the accumulation structure that formed in 2022 into 23, and I have three counts here to work with for us to pay attention to. And let's get my little pen handy here. This is the accumulation area. This first count, which is 9 columns, and this is a backup of sorts at this zone to 3850. This counts 4850 to 5200. Well, right now we're only at 4400, and we're just above that resistance zone at 4300. We actually have some really nice point and figure work that pointed to this area as an objective range. We finally hit it. But this count here takes us to the highs of the bull market back in 2021. And that would be a major achievement for the S&P, but a long way away from here, and making the point that the S&P is lagging the Nasdaq 100 by a substantial margin so far. And so here we see that the larger count goes all the way up to 6350, 6700. I would suspect if we can fulfill that count, but this is all in that accumulation that formed here in this zone in 2022. If this forms and can get to this level, we probably need a reaccumulation pause somewhere in the zone of the prior highs from 2021. And we have a ways to go just to get to that level. So something to watch. Now, special note, and that is that if we look at this area right here, this is a little swing count. And the swing count is takes us up to 4550. Close to that now. 4400 was the high touch here. 4550 is the swing count, and that would be, I think, a natural area to stop, look, and listen, because there's some resistance in this zone right here. And so we will watch that resistance area to see if we can get to that level. And then finally, just as a side note, of interest is that I did a point figure count of the distribution area using this 3-box method. This is 50-point scaling, and this count here, and we always want to be very careful and conservative in our point figure counts, especially so with distribution counts. And so we take this area, counts down to 3450 from the high. We were within 1 box of fulfilling that count objective range at the lows that were made last fall. And so pretty darn good. There is a larger count here, may come into play later on, but for the moment, we have fulfilled a very important count to this zone, and worked quite nicely. And we have talked about these distribution counts in the past. Finally, last chart, this is the S&P vertical chart. This is the whole accumulation zone. We've looked at this a number of times in the past. And so these notes here, I like to keep my notes on the chart because that helps me to recall the key things I was thinking at the time that I was assembling the chart as we go. Now this chart, I just constantly keep adding to it over time. So when we had that original preliminary support and selling climax, I'm labeling that at the time that it happened. I'm seeing these big gaps. I showed you these at the time and said, this looks climactic to me. Well, in fact, this did prove to be the important low, selling climax. And then this was key resistance. Also, this upthrusting action at the August peak also is an important resistance area, and we've upthrusted it right here. The point I would like to make now is to go down and look at the 50-day moving average breadth indicator, stocks above the 50-day, and as you've already surmised from looking at this, we have not achieved the strength that we were, and the breadth that we were able to achieve back in February, nor back at the beginning of December, or back in August. And so we are still at this area just below the 70 zone. There is not as much breadth in the S&P now. I think that the Nasdaq big cap stocks have sucked the oxygen out of the room in terms of cash flow from institutions. and they will, as we get into the new quarter, I think start to distribute some of those funds out into other areas of the market. That would be my expectation. But this lack of breadth in here is something for us to be concerned about. And at least on a short-term basis, and I'm highlighting these areas in yellow, this still room to rally is a note that I made a while back. And this was back in May when there was the breadth could not exceed really the 50% level. Then it did, in fact, with the jump up and out of this zone, here is our backing up action, that this zone was jumped and took out prior resistance levels, and we would now want to see the stock price of the S&P hold above this resistance area or not go very deeply back into it. Also, I do want to make a cautionary note here, and that is that we have a peak that occurred in early June right there, and we have a test of that peak right here. This looks to me like a potential non-confirmation of the strength that was made in the S&Ps, because the breadth of the market has been lagging at this zone. And this, with this very, very sharp advance that we had up to the 4450 level, we should have seen the breadth expand here on this second push up in the middle of the month. And that did not happen. We have a non-confirmation of the strength in our stocks above their 50-day moving average. So that is a concern. And there we have it. So this is our zone. We're getting very close to fulfilling our objective counts. And this is the place where we start to have to really pay very close attention, do our chart reading, our tape reading of the Wyckoff way. And we will continue to do that right here. Just a reminder, sign up, join us for the Wyckoff market discussion next Wednesday. It's going to be, that says June 26th. I think it's the 28th. I apologize for that. And so let me even put an 8 there. And then also, I want to thank you for watching. We'll see you next time on Power Charting. Take care.